Ladies and gentlemen, Tom Lee just made a mega prediction, and I think it's important for us to take note of it alongside with what Warren Buffett is doing right now. And by combining both signal, we will develop the right strategy to face this current market situation. Let's watch on, shall we? So market right now is a mega bull run and it's going to propel the rocket even higher. But I think we need to take the cue from two legends right now in the stock market field, which is Tom Lee and Warren Buffett. And both of them are given two different signals that we should try to take yardstick from. So basically, Tom Lee is making a mega prediction. And his mega prediction is that the stock market will hit 7,500 points for S&P 500 by end of this year, 31st December 2025. And that's a 12% upside from where we are. And I'm going to quote him that November is going to be an ignition month, and panic buying in this period will drive up a broadening rally. And he even make a prediction that you will hit 7,000 points by end of this month, which is November. That's a damn bold prediction. And I can't assess whether 7,500 points is going to be the right number. But I think 7,000 points, I do think so that he's probably going to be right on this one. And why is it so? Because right now for Q4, there are many factors that are driving the whole stock market up. And no, typically in year end, November, December are historically strong months. So there's seasonal encouragement that aligns with this. And right now, he expects there to be at least one more rate cut, okay, for the end of the year. So that's another 25 basis point cut, which is 0.25%. And he do think that a lot of the fund managers that has megally underperformed the stock market will try to chase performance because 80% of the fund managers underperform their benchmark. So they are trying to catch up. And as they catch up, they will all rush in to buy equities, and that will drive the stock market even higher. At this juncture, artificial intelligence is driving a lot of business earnings up in a mega way. And all these combined will drive the whole stock market up in a very impressive way, according to Tom Lee. Meanwhile, we have got Warren Buffett that is kind of hitting the brakes, and he has been selling. In fact, he has sold so much of his stock that right now his total portfolio of cash stands at 37% of the entire market cap. So he's been selling for 12 quarters so far. Just keep selling. But yet his entire portfolio is going higher and higher. That's because as the market goes up, he sell part of it. Market goes up, he sell part of it. His total cash pile right now stands at $382 billion, which is record high in, guess what? In T-bills, bonds. And it's earning 4.5%. So he's rebalancing to bonds, and which is what I think I've been sharing everybody some wisdom on doing that. So Warren Buffett profit-taking playbook looks like this. When a stock rise up and become overvalued, he sell part of it, okay? And he basically reduced the heavy weight. And he has been doing that quite a lot. He cleared off Bank of America by quite a bit. He sells T-Mobile completely, and yet there are some shares he doesn't sell. Coca-Cola and American Express he doesn't sell, and that's because those shares generate a fair amount of dividends. And then he paused his buyback because right now his own shares, Berkshire Hathaway, is also overvalued. Okay, so this is how he plays it, and we need to take a chapter from there. There are two stocks that Warren Buffett never sell. Okay, one of them is Coca-Cola, and Coca-Cola has been giving him some phenomenal returns, and that's high dividend stocks together with capital growth, and of course American Express as well. So year on year, Coca-Cola has increased by 8%, and American Express by about 15%. So these two stocks he doesn't sell, so it doesn't mean that you have to sell everything that makes profit. So my position is that we should be bullishly conservative. And that's a hybrid strategy, right? You balance both the bear and the bull. And what we want to do is to capture the upside while protecting our capital. So we combine Tom Lee's optimism with Warren Buffett's discipline. So I've been asking Ben to restock take our entire cash position as a percent of entire portfolio, and as a result, we could actually drive a number closer towards what Warren Buffett is going for. Now, there's a four-pillar portfolio approach that I'm approaching. Number one, and I shared all this with everybody already. Number one, I think 30% of the profit from the stock we can take out, okay, and we rebalance, right, to bonds especially and or the other assets, and I only hold global index, right, global index funds, and I already said again what I hold. And this is a time where if you are working like me, if your businesses are generating cash or whatever, this is the time to accumulate some dry powder as well. So this four approach is what I'm heading towards. So in this way, I ride the wave very strongly as well, okay? And I have some level of diversification through global index and diversification through other assets as well. And meanwhile, I accumulate dry powder. So what I think will happen over the next 12 months or so is November, December, if what Tom Lee says is correct, and I do think that there's some level of positivity towards what he says. So the whole market will drive up, okay? And we take some profits out and rebalance to other assets. Then after that, the rally will probably spread out to other assets as well, especially small cap stocks and things like that. And whenever there are opportunistic crash that comes along, we can deploy some of our asset. Now, are there risks ahead? Of course, there's so much risk. So right now, the government shutdown still haven't resolved yet in US. That's most ridiculous, right? Government can shut down for so long, and I think it will continue to drag. Now, will there be a major crash? I think the probability is low on this one. So I think that whenever the government shutdown resolved, there's a big rebound that comes. Would there be another chance that inflation will reignite? Possibly. I think the risk is a less as well. Some geopolitical tension and fights. Anything is possible. Recession, probably possible. A very weird recession is happening. I don't know how to assess that from a stock market point of view completely and accurately. But AI type recession that caused unemployment to be very high and yet businesses do well. This is a very, very weird hybrid kind of recession-ish kind of environment. So I think this we got to watch on very carefully. So in a nutshell, I will continue to ride the wave, hold on for a long period of time. I will trim some upsides and rebalance to other asset. I will hold the core forever, which is the globally diversified index. I'm going to let it compound and rebalance some of the winners. And when there are crashes, I'll buy it. Very clear. And on top, below all this is a very powerful financial safety net called the CPF. So right now, basically, I think just ride the rocket, right? We have a rocket right now. It's no longer a bull, it's a rocket. So I would say secure the gains, compound the growth, okay? And always remember what Warren Buffett say, that be fearful when other people are greedy and be greedy when other people are fearful. This is a time where the whole world is getting greedy. We got to be more fearful. And this is probably also the best time of year to be in stock as well. So a kind of hybridize both philosophy, and I think we should be safe. Okay. Thank you for watching. I'm happy to hear your views. Thank you and goodbye.